Good evening, everyone. Welcome to session 25 of the weekly live group coaching session. This is for week 4 of this year. And tonight is a special session for the CNY Open Doors session. So basically, this is open up for the public. So just in case you are new to this webinar, just feel free to ask questions along and related to the material that I'm sharing with you. I will just answer whenever I can when there's relevant questions. And if you have special ticker symbols or stocks that you would like me to take a look, please hold it to the later part of the session, which will be in the end during the Q&A. So I will just go through all the charts and also answer some of the questions. All right, so let's get started tonight. All right, so tonight's agenda, we have a lot to cover. The topic for tonight will be about the laggard. So Russell 2000 is the laggard, and I'll be showing you with the market breadth. If you have watched my previous session or some of the YouTube session extracted from the weekly session, then you're probably going to expect some of the material, but I would like to emphasize that there is some anomaly within this market breadth, and I will be showing you what to look for and why is a difference and what can we expect as well. And also, I will be showing you the price target for the Russell 2000 based on the PNF and also the tactic. And also, as usual, I will cover the market outlook with the 4 major US indices, crude oil and Bitcoin. And also, I'll be sharing with you a new tool that I'm still developing. Is my screener, which is still in the beta version. Not so much about the stocks because I'm going to cover all the stocks for the trading opportunities later with the US, the Bursa stocks. And for this, I will be just showing you how I use my screener as a gauge of the overall market environment. So I think this will be interesting as well. And as usual, trade management and trade review are the usual part of the weekly session, and followed by the trade opportunities in the US market and also the Malaysia markets. And eventually, we'll go through a lot of the charts from students and also from you guys. If you have any ticker symbols, as long as you can yell it out, call it, then we'll just cover it and go through. All right, so let's get started. Okay, so the first thing that I would like to show you is about the Russell 2000. So it's the worst performing index in the 4 major US indices. So why is it the worst performing? So if you take a look here, this is S&P, and this is Russell, and that's a Dow Jones, and that's a Nasdaq. So I think it's quite obvious that among all the 4 indices, Russell already reached a top here, so forming a trading range that's pretty much back in early last year. So that's probably somewhere around February last year, and has been consolidating in a horizontal trading range for around a year. And we did see that it just created an uptrust, so it's just a temporary commitment. So this looks like a side of strong rally, but it actually failed to commit above this resistance level. So eventually just fell back in here. So it's just an uptrust, or you can call it uptrust after distribution, because I think that this is a distribution type of the structure. So pretty much that's the from the absolute or the relative performance is very much nothing. So from for the S&P 500, at least that is still pretty much within an uptrend. So we got a higher high, higher lows throughout, and only until recently we see that probably a lower low here. So there is a low form, and we got a lower low. So pretty much that I think S&P 500 is still the strongest, and S&P, sorry, the Dow Jones is very much in an upsloping type of the trading range, and it's still not yet broke down because it's still very much testing the support at the moment. So you can see that this support get tested a few times and it's still holding up quite well. Unlike Russell 2000, is very much just have a breakdown. So we got a sign of weakness here, inability to rally, and then eventually just break down. So Nasdaq is at this time, I think, is sort of just leading the way down, apart from the RTY, the Russell 2000, because you can definitely compare that prior to the breakdown in November. So that's pretty much a topping formation formed in the November last year, and Nasdaq is certainly is a leadership. So it's just leading all the way up until November last year. It's just sort of forming a top, and then followed by a trading range. It's kind of like a distributional type, and we see that volume has been increasing, and we see there's a breakdown of the localized structure, but still is managed to kind of hold it here and attempt to rally kind of a spring at the moment. So this is a low support and just have a break below, but there is no commitment to the downside. So anyway, I will be just covering in detail for all the major indices, but right now you can see that in terms of the performance, we can clearly see that there is absolute performance, and also for the relative part of the performance is just the worst performing type of the index. So Russell 2000 is definitely the worst performing index among these four. Okay, so if you take a look at the daily chart here, so this is a blowed up version of the Russell 2000. I think it's very clear that there's a prior leadership here, prior uptrend, and we see that there is a buying climax forming. So there is a climatic up move, and followed by a change of character, which is literally the biggest down wave if we compare to the prior one. So that actually formed as a automatic reaction. So there's a secondary test as an upthrust. That's a phase A. So that's pretty much the Wyckoff event, and also the phases analysis. So throughout this trading range, so this is the trading range that we're looking for, is just have quite a few tests at the resistance and also at the support area. So until this point, so there's a pretty much a very bullish formation, because overall, despite we are seeing kind of a apex formation with increasing of the volume, which is kind of opposite of what we can expect for the triangle formation. Usually that we'll expect there's a contraction of the volatility, both in the price spread and also the decreasing of the volume as well. But in this case, despite we see that there is an increasing of the volume here, and also localized increase, I think prior to that is here as well. So it just managed to hold a low. So I especially like this kind of the apex formation, because that actually shows quite a lot of the supply absorption at this moment. That's why throughout this structure is definitely the accumulation time of the structure, and then we can expect there's a breakout happen, which it did. There's a sign of strength rally, and overall this pullback is not too bad, and I think things actually change when there is a breakdown bar. So this is actually the failure. So you can see that this bar here, there is the biggest spread. This is the lower, there's the high. So the spread is, I think, one of the biggest among across this trading range. And we see that the volume here, so is one of the biggest. So probably it should be this one. So this is the volume here. Okay, so definitely this is a signal that it is not a sign of strength rally. It's definitely become an uptrust. So this is the first sign of the weakness. It actually happened in November as well. So November last year is definitely one of the biggest clues that the market started to change, and I think it's more obvious in the S&P 500 as well, and also the Nasdaq. But let's just focus on the Russell 2000 at this point. So right after this, there is a kind of a sell-off here, and we see that there is a rally, but eventually it just shows some weakness, because it just failed to even have an attempt to test the previous high here. So definitely this is another weakness. It just shows there's a inability to rally right after the sign of weakness. Okay, and followed by another hidden upthrust and a breakdown bar. So the down wave actually started from here, and it did not really respect this support zone. So there is a support level somewhere around 2100. So it get tested quite a lot of times, and every time it tested this level 2100, it get bounced up. But this time it just breaks down decisively, and this is definitely another weakness itself, a sign of weakness. And last week, I think the call was good. I think I mentioned that don't get overly bearish because this is a very climatic down move, and we sort of approaching the selling climax. So I said that we are looking for a selling climax, which it did come on Monday. So the Monday bar was actually a selling climax, but the automatic rally or the change of character, which might be still unfolding. Well, anyway, this is the automatic rally. Is a bit disappointed because it just kind of kept at this level at the moment. So roughly at this point of the time, if this is a UTED, an uptrust after distribution, and like we have another sign of weakness here, so this is a sign of weakness, and it's still probably having a backup action at the moment. So um, technically, I think that the whole distribution structure is not yet completed, but it's almost, because if we see that there is a decisive breakdown with this level, so that should completed this distribution structure. Okay, so right now is certainly at a very bearish location or bearish phase, because it's like a sign of weakness with a backup action, and if it break down, then it's officially enter into the phase E markdown phase. So that will be not a good picture for all the bulls. Okay, so there is one thing that's interesting here. So I think if there's only one thing that you can take out from today's session, I think this will be it. So just pay attention to this chart here. So this is the market breadth of the Russell 2000. You can see that, okay, so the ticker symbol for this is, I think, R2TH. So is definitely you can find it in the trading view. And this is just a typical Russell index. You can use the RTY, the futures, but anyway, this is just a index. So the thing that I would like to draw your attention is that this market breadth here. So this is the percentage of the stocks above the 200-day MA. It's sort of like a gauge of the overall market, but it's specifically to the Russell 2000. So I think in a Russell 2000, definitely there are quite a few times that it dipped below 30. So in this market breadth, I separated with 70, 50, and also 30 with the three lines here. So it's just the levels that I am watching closely. So first of all, above 70, it seems like is a super optimistic market, very bullish and very strong environment for the bulls. Within 50 to 70% is just like a very normal market. I think a bull run is very healthy because there is like 50 to 70% of the stocks is above the 200-day MA. So that's a very healthy market. It's quite normal to see this kind of the situation, especially in a bull market. However, the danger actually comes when it's below the 50% level. So when the market breadth actually comes down from the 50% level, I think that actually spells trouble. So I've actually just circled quite a few. So there's one in 2014. So whenever there is a dip below the 50% level and you actually fail to get back up, so in this case, this is not a problem. This is kind of a problem because it just failed to get back up. So at this point, we will see that it is likely to go down to test this 30% level. So can you imagine that there's only 30% of the stocks that's actually up above 200-day moving average? So that is generally like a oversold condition. So a lot of the stocks have been sold down, and a lot of the people are bearish. So the market sentiment is generally bearish because they just think that well, it's pretty much a bull market. All the stocks or majority of the stocks are going down. So in this case, so 30% is kind of like an oversold level. And once it's reached oversold level, likely we'll see that there is a technical rebound. So in this case, it coincided very well with the index. So I have actually just highlighted with the green color here. So when it's deep down, and if it managed to get back up and kickstart a rally, then likely this is the low form here. So as shown here. So there is a once in 2014 and twice in 2015. So you can see that once is dip below, get back up. So that actually correlates very well with the index. And this is also another dip below and then get back up. So that is another leg up from of the support level. And later, this is another one. There's a 2018. I think there's a very close to the Christmas sell-off. So there are two times actually dip below the 30% level. So the first one, second one, that correlates to these two rally. Okay, but eventually, if the rally actually just failed to come in above the 50% level right after the 30% bounce, it actually become quite nasty. So the first times in the 2014 here, it managed to come in above the 50% level. So majority of the stocks, like you can just imagine that there are more than 50% of the stocks they are above the 200-day MA, and then eventually it can come in above here. So that actually saved the market from dropping further. So that has become a healthy market for another year. So this not too bad. So that's why you see that the index are still normally performing quite well. But after that, when it dipped below in 2015, there are two times. So the first one, second ones, it just failed to get above the 50% level, and eventually it will just dip a lot lower below the 30% level. So I think in this case is somewhere around 15, and in the Christmas sell-off in 2018, that's probably close to 10. And in a COVID sell-off, I think this is quite interesting. So COVID sell-off, there is a bounce, a very weak bounce up when it hit the 30% level. That actually coincides or corresponds to this index. So you can see the rebound is super weak. But I think this is quite a rare event. So this is actually triggered by the COVID, so COVID-19. So it actually shows that there is a lot of the urgency of the distribution by the institution. That's why we see that there is very weak rebound after it hit the oversold level. So it's just a very tiny rebound, and then it just capitulation follow. So eventually, I think it dipped below the 10% level. So can you imagine that there is less than 10% of the stocks that's actually above the 200-day MA? So the whole market sentiment is super bearish. They think the sky is falling. So everything is just need to just get so down. They just don't really want to hold any stocks, because if you hold stocks, then it will just come down for sure. So that's the kind of the sentiment that you can expect when you reach this kind of the deeply oversold or the capitulation type of the market breadth. So this is kind of like the oversold, but this is really the capitulation market breadth. So whenever it hit this, it really signals the market bottom. So let's take a look here. So there's once in the Christmas sell-off. Look at this V-shaped rebound. So it corresponds to here. So it just have a kickstart rally. So we see that there will be a lot of the stocks just moving up, and then will actually push this index up and then get back up. So this is like a very deep shakeout. And in the 2016, so we can see that there is a dip below this 30% level, and eventually it just have a bounce up here. So that actually corresponds to the bottom. So there's a market bottom. So there's a market bottom when you actually reach this capitulation level. So somewhere around, well, I would say probably below 20. It might be 15, might be 10, might be even below 10. So I think just discount 2014 because 2014 actually managed to climb above 50% level. So actually saved the market. So they violated the bearish scenario. And 2020 COVID sell-off is also will be discounted for the comparison because this is quite a rare event and we can't really use this. So I think that actually left us with the Christmas sell-off in the 2018 and also in 2015 as well. So we'll be using these two as the analogs for comparison and also the analysis for the current markets. So you can see that right now, Russell 2000 actually just hit this oversold level. So there is an oversold level at about 30%. It just kind of hit that last week. So there's a dip below. We still haven't actually see that it just managed to climb back up. So that is sort of like the anticipation that is the whole market is under oversold condition and is overextended. So definitely you can tell from this price action is almost like a straight line. So just keep dropping. So I think that the market is definitely oversold, and every time based on these two analogs here, 2018 and also 15, there will be a bounce, and the bounce is roughly around I would say is probably 5 to about 8%. So that is a bounce of the support, a bounce of the support. But if the bounce fail to commit above the 50% level, I think there will be continuation to the downside with deeply oversold condition. So that's way below this 30% level. Okay, so right now, does it mean that it will just automatically bounce back up and then we'll see that there will be a rally similar to the previous? Okay, I think that comes to another point here. So whenever we compare a chart or just do some comparison, whether it's a market breadth or other indicators, context is very important. So let's talk about the context. So in 2015, the context of the price structure in the Russell 2000 is that there is a uptrend followed by a change of character and then a trading range. So you can see that I have already draw up the trading range in these two black lines. So there's a trading range and we got a uptrust, a temporary commitment here. But ultimately, this is the trading range. So every time it hits the 30% level, the oversold level, it just bounce up. It's right off the support level. So you can see that it just lean on this support level of the trading range. So it's just bouncing up. So whenever I hit oversold, bouncing up, oversold, bouncing up again. So in 2018 is similar as well. So there are two times it actually bounce up from here. But the context is also here like this. There's a big trading range form. So we got a uptrust, we got a shakeout, got another uptrust here as well. But eventually that's of the support level. So even in this COVID cell, there is also of the support level. So you can see how important is this structure. But for the current structure, so here is a support here. So this is a trading range. Here is a support. So Russell 2000 has already broken down the support. It's sort of like on a way down and it's in a markdown phase, but it's probably still in a backup action. But the support is already broken. So unlike the previous case, whether it's here or whether it's here or here or here, so it just cannot rely on the support level anymore. And because the whole structure here, when I hit the support level, is still valid, but now the support has been broken, it's no longer valid. So it's sort of like in a free fall situation, and the only support we have is this kind of the very weak structure here. So I think this is a big difference from the past. So we definitely see that there is a bounce when it hit the previous oversold level as shown in 2018 and definitely in 2015 two times. But here we can't really rely on the structure. But still, in terms of the overextended and also the oversold condition, I think this is definitely a valid, and we certainly reach this kind of the oversold level, and that's why I still anticipate a bounce. But I will anticipate the magnitude of the bounce is lesser than the previous, so which means that we might not get a like 5% to 8-9% bounce out like this. So rather, it will be maybe lesser. So, but I think it won't be this little tiny little weak rally. So hopefully it will be just maybe 3% or even 4%. So unlike the previous 5 to 8%. So that's what I actually suspect. But ultimately, we still need to just wait for the price action to confirm. So I think last week price action was generally very good, which I will be sharing with you in detail. Let's see what else we got here. Okay, so this is the price targets for the Russell 2000. So definitely based on just two segments. So I didn't really count all the way back to last year, January, February, but I just took one segment here. That's from the uptrust or the uptrust of the distribution. So there's just one segment, and then the other segment is just underneath here. So the first segment actually just give us somewhere around 1660 to about 1840. So this is the price target, the first price target zone that we can expect. And the second segment here, based on the blue segment, is somewhere around 1560 to 1740. So that is the zone. So it just coincide each other quite well. So I will probably say that is somewhere around 17. So that should be around the target. So um, has the event started? HYT say yes. It's already started. Yes, yes. So you should be hearing my presentation. So and also the screen sharing as well. So yeah, already started. Okay, so also next one, we finish the point and figure target. So I think this target will only be achieved if we get some form of the weak rally. So I'm actually expecting a rally from here. So the rally could be, I mean, at most, at best, it probably will go to about 2100. So that will be actually testing this access line. So I think this will be already quite a good rally. So of course, if the market actually rally all the way back above this and be able to come in above, that should certainly violate the bearish scenario. All right. So if the market just turn and just have a weak rally here, and eventually it will just drop here and break down. So if it breaks, then I think I will be looking at the first target zone that's somewhere around 1660, 1840. So that's the price target here. All right. So HYT say can't view the live session. Yeah, I think should just as suggested by Dave, just exit and rejoin again. So you should see the chart and also be hearing the sound as well. All right, so that's actually my expectation, and let's just go through this tactic. So at this point, I think the tactic here should be quite simple and straightforward. I will be shorting on the rebound on the laggers. So next week will be quite important. So because last week already be showing all the bullish signs, and there will be there's actually presence of the demand in the price and also the volume. So I think the bull has actually secured a ticket, and it should actually perform the coming week. So the bull is given a chance to perform the coming week. So if indeed the performance is poor and it actually have a very weak rally up, then we know that is in a very bearish situation. Okay, so either it's a short on a rebound for the laggers, or it's just a wait for the capitulation. So it's just holding up cash and to identify a base to long. So like I say, because the overall market is very close to the capitulation level for the market breadth. That means that the bottom is could be very near. So if I will expect a final drop, then I think the orange zone, orange level, which is the previous chart that I show you, that somewhere around maybe just say 1700, that will be the target. I think that should actually coincide well within with the market breadth. So the market breadth should actually hit the capitulation level. So if you recall, this is the capitulation level, so somewhere around maybe 1510. So that is actually my anticipation if there is a continuation to the downside. So 1700, somewhere around here, or even slightly below. And then once it's deep below, I think that should be it. So that should be the capitulation, and we should see this kind of the automatic rally to follow. So that is for the bearish case, for the capitulation level, and for the market bottom. But definitely need to closely monitor the market. Otherwise, I think just sit for cash is the safest if you are not comfortable with shorting, because at this point, I think the volatility is super high and it's really easy to get hurt from either side. Now it's definitely is late to short. That's why I'm suggesting that I'll be just waiting for a rebound, which I will be sharing with you in a few trading opportunities. Some of the examples, quite a textbook style, I think, very easy to understand as well. And otherwise, if you long now and in case there's a final leg down, I think that will get wiped out unless you are generally a very short-term swing trader and you are quite comfortable with handling the super high volatility. Okay. All right. So market outlook. So let's jump to the chart here. We'll be looking at the four indices, crude oil and also Bitcoin. Let's start from the index. So that's the S&P 500. So let's just maybe let's continue with Russell first. Let's zoom in Russell. Okay, so definitely Russell, as I suggested, that it's just having a breakdown. So we got an uptrust of the distribution. So there's a failure. So inability to rally, sign of weakness, and that's kind of an automatic rally because right now, I'm just suggesting that that's probably the automatic rally. If there is a very strong rally unfold, uh, probably it will just get some rejection at a 2100. So 2100 is quite a typical axis line. So when I say axis line, it just means that previously is a support level, and once it's broken, it become a resistance. So there's quite a typical style of the traditional type of the technical analysis. And if you can, under a very strong rebound, it will probably just come down to here. And at that point, you'll probably see some of the stocks actually showing similar structure. That I think that could be presenting another chance to go short if it reverses from here, and at least to test the swing low at this point. If it breaks here, 1920, then I think it should probably just go down further to somewhere around 1700. I think in terms of the big structure, if you take a look at 1700, it just sort of coincides with the previous swing high here, and we got some level here as well. So I think that could be an interesting level to watch, and I think that somehow coincides with my target zone. So you can see this is the target zone 1840, 1660. So that's somewhere around here. So 140, 1660, that is a target zone. So if it breaks down from here, then I think the next target zone will be at this zone here. All right. So I still have further targets, but let's stick to this first target at this point. So if we can reach the first target, then we'll be looking at the next target as well. All right. So in terms of overall structure last week, you can definitely tell, maybe look at the weekly time frame. Okay, so the week before we have a breakdown, so that comes with quite a consistent high volume and a lot of the supply, a lot of the commitment, just a clean break. So you can see this is a very clean breakdown. So last week is very interesting. Look at the volume. This is the climatic volume, and I think this is the highest volume that we have ever seen. Yes, it's the highest, definitely. So it's even higher than the COVID low here. So definitely it's highest. So definitely, I think um, the volume is very climatic and it's the highest, and also is, look at this, look at the spread here. So in terms of a spread, is very limited. So if you compare to the previous, it's very limited. And in terms of the progress travel to the downside, so last week here we got progress to the downside here, and this week here, and the progress to the downside is tiny. Okay, so we definitely got a shortening of the trust. Yes, absolutely, Nikki. So it just is definitely is the effort versus results. So with the increasing of the effort last week, so look at how high is the effort behind. So we got the highest volume, the increasing of the effort. So what is the results to the downside? So the results to the downside is very limited. So whether we count it as using the spread or whether we just compare it with the trust, so the progress to the downside is just tiny compared to the previous bar. So when we compare this bar to this bar, so these two, then certainly we can definitely tell there is presence of demand, or the demand already come in last week. So now it's just up to the bull to perform, because we got a demand come in last week as reflected in this stopping volume, and it just stopped the movement. It just stop the down move to progress further. So next week the bull should take control. So in case the bull doesn't perform, then we can definitely confirm that there is a lot more supply in the market, or the demand is definitely very weak. So let's just watch out this level 2100 if it gets there. So the first level uh, to watch is definitely yeah, I'll be saying that is this green line 2040, because that is a very important line. This is the FOMC bar, which actually reverse everything. So this is the very important bar that it needs first to overcome. If it can overcome this level, then definitely I think it should have a chance to test 2100. All right. Okay, so let's see. Okay, so that's for the Russell 2000. For S&P 500 is actually very similar. So we got um, a lot of the efforts last week, and definitely this is the climatic volume, and you can tell from the volume easily, and there's inability to go down. So we got a no progress to the downside. So if you just look at this weekly chart, so it's very similar to Russell. So definitely there is a increasing of the volume here, but look at the progress to the downside. In fact, there is also, this is also an up week. So it finally snap back from 1, 2, 3, 4. So definitely this is up week. And also effort versus result, there's a demand come in on last week. So now the bull should really perform. So I think in terms of the levels to watch, um, firstly, as I mentioned, I think Wednesday bar is very important. So that actually coincides well, pretty much is a 4450 level. So that is the level, the first level you need to overcome, and followed by the access line or the access zone. So somewhere around 4500 to 4550. So let's see if we can overcome this first level 4440, followed by 4500 and 4550. So this is essentially the the resistance zone. So if it just get rejected here, likely there will be another leg down to test the swing low here. All right, so that's S&P 500. And similarly to the Nasdaq, I think Nasdaq actually just break below this axis line. So in terms of the weekly, definitely is similar to S&P 500, and we got the effort versus results showed up everywhere. So increasing of the volume, and look at the results. So there is no follow through to the downside. So suggesting that there is a whole lot of the demand come in. So the bull should actually charge up and also perform next week. But how far can it go? It's just up to the market to decide. So we can only just anticipate from the chart here. Okay, so if we look at this daily chart here, is definitely oversold. So look at this. So it's very oversold, overextended, and if it get backs up, uh, as usual, Wednesday high here is the first level, 14600 to overcome, followed by probably well, there's a few more level. I think these are all the levels or the bars here, 14800. And if you look at this oversold channel, so that could be it. So around 1500 or 14800. So if you can travel this far, then we need to judge the next move to whether it's to the downside or as a test. So if you can just rally, have a strong rally up, and have this kind of the higher low decline, then that could be a bullish case. Otherwise, it could just be forming another trading range itself before we can just call it is a distribution or the accumulation. Okay, so that's Nasdaq, and I think eventually the Dow Jones is very similar. Dow Jones is just, yeah, if we look at the weekly, I think it's a very similar structure. We definitely got demand come in right here, and it's right at the support level. So next week should be a bullish week. So in case the bull doesn't perform, then we know that something is really not right. So the market will become very bearish. All right. Okay, so that's pretty much the US market. And let's take a look at Bitcoin. So, and also the crude oil. So let's start from the crude oil. Right now, the outperforming sector is definitely energy. Is very much related to the crude oil. So the crude oil, if you look at it, is suddenly, I think it started the rally in during the Christmas. So this is the after the Christmas rally, committed above the 7.3 here, and after that, it just kind of going all the way up, uh, testing this previous swing high level at about 85. But look at the reaction. So this is a very shallow type of the reaction, suggesting continuation to the upside. Okay, but right now, last 2 days, 2 session, we see that there is some rejection tail here, but the volume is just kind of normal, and I think we should see another pullback or consolidation. So that could be the backup action. So if this is kind of like a sign of strength rally, attempt to come in above, then that should be the test or the backup action. So the energy should just consolidate for some time, and we might see some rotation going on, maybe into some deeply oversold stocks like the tech stocks or others. So that is my anticipation right now for the short term. Might have some pullback. Okay, so next one, I think Bitcoin is interesting. Let's take a look at Bitcoin. All right, so this is Bitcoin, and I think pretty much that we started the uptrust, the downtrend, also very similar to the stocks market. November last year. So after the uptrust, there is a leg down here. So there's a sell off. It's just very much within the down channel. But if you look at the overall long-term structure, so it's still very much, we see the uptrend. We see a big trading range. And right now it's probably short term is going to go up. But long-term wise, it's probably, I suspect that it might just come down to test 30,000 level. So 30,000 is quite a strong level, or even spring below. So it's just a temporary commitment followed by a quick recovery up. So let's see how it can unfold. But at the moment, I think it just kind of lack of the supply. So if you look at the hourly time frame, so there is quite a nice structure. So we we get some like selling climax, and then we have a spring. So this is a spring, a sign of strength rally, and kind of a backing up process here. And I think within this big structure or the big trading range, supply has been going down, decreasing, which is still a bullish sign. So I suspect that it could just continue to go up, maybe initiate some breakout as long as it can overcome the selling zone right there, and maybe you can just test the level, the test the supply line, and then have another reaction down. So that's Bitcoin. My anticipation overall for long term, I still anticipate some more downside. Maybe get a final flush down to 30,000 before it can just form its own structure. So if you get final flush here, a spring, 30,000 get supported, then I think it could develop its own structure and then go up again. Okay, so that's a Bitcoin. All right, so next one. So this is the market environment that's based on the screener that I'm still developing. It's still under beta version. So um, that is the bullish scan. I got maybe 6 or 7 type of the different combination, and overall, I think it's probably worth to have a look about 100 stocks. But for the bearish stocks, easily I can have about 300 more stocks. So you can tell from this look here, the market environment is still generally bearish. So at this point, I think it could be a useful tool. At least how I'm going to use it, it will be some form of the gauging of the market, whether it's a very optimistic market or whether it's a very bullish market. Then I think in this case, maybe breakout will work quite well, and maybe we can just approach the bullish stocks rather than go shorting. But at this point, I don't really think the market is too healthy because there's still a lot of the shortable stocks. So, which later I'm going to just narrow down from these hundreds of stocks into just quite a few stocks, which probably fits my trading entry criteria. Okay. So Nikki just say correlates with the market breadth analysis. Yes, absolutely. So I think yeah, this is just another tools that I just confirm with the overall market sentiment or the overall market environment. Because if one day in my scan, then I find that there is less than 50 stocks that are shortable, then obviously, and there become maybe a few hundreds, then certainly I think the market is very bullish, and I think it will work very well for all the breakout trade. Right now, some of the breakout trade might easily fail, but some like the energy sectors might have legs to run some more up. Okay, next one. Okay, so this is the ongoing trade that I think I cover in my previous session. So I cover Hang Seng Index last week for the swing trade. I think it's a reversal trade, and also Kingsoft, 2U, and Ozone is just like from maybe a month or 3 weeks ago. So how to actually manage this shortable, or sorry, this short bearish stocks which are currently in a position uh, if we anticipate the market is going to rebound. So first, let's take a look at Hang Seng. Let's see Hang Seng. Okay, so this is a Hang Seng Index, and last Sunday is 1, 2, 3, 4, 5. Okay, last Sunday is here. So this bar, the close of this bar, and I think I just shorted it after it break below the low with my hourly time frame. Okay, so the entry is somewhere around here. So right after it just break below this, because overall the plan is quite simple. I mean the plan is just based on this down channel. So we got quite a few touch here, and this is the fourth touch here, and we just seeing this as a rebound, sorry, a buy low sell high trade, like a range bounding. So it just kind of hit the top part of the trading range. Then we can just enter a short or buy the put warrant option, or just use a future or CFD, and then we can anticipate maybe a test. I think that could be the first target, and if it just reverse, then I think the trailing stop will get me out. Otherwise, it could have a final test here. So this is another target here. So about to close, but not yet. Let's see how much to squeeze out from the swing trade. And next one is Kings of KC. So KC is a Chinese stocks listed in the US. So I cover KC maybe 2 weeks ago here. So highlighted here. I think my entry is probably either this bar or the next bar. Um, so I think right now is quite interesting because what you can see here is a breakdown of the structure. So this is kind of like a structure breakdown, tested, continuation to the downside, and we see that there's an extended move. So it's an oversold condition. And look at the volume. So there's also effort versus results in the specific stocks here. So ton of the efforts, but no results to the downside. So that suggested that there's demand come in. So I think my trailing, the trailing should be somewhere around here, just based on a commitment bar. And if it just reverse and hit that, I think that could take me out with generally some nice profits here. So the reward to risk is definitely quite high. And next one is 2U. So 2U, I think, is a Cathy Wood stock. So I covered 2U two times. One's here, the other is here. So setup is actually quite straightforward. It's also based on a previous leadership, like previous downtrend, inability to rally, and also just a breakdown, and also tested, rejected, and then breakdown, continuation to the downside, and then just drift down. But you can see that there is also some effort versus results. So we definitely get some stopping volume. So this is a stopping volume, but the rally is very weak. So I don't really see a follow through to the upside, and instead it just kind of drift down and also break below until last Friday. It's kind of have a spring. So right now it's just a matter of managing the existing position. So probably somewhere around here, if you can just reverse, commit back up, then that's out. So just close the trade. And next one is Ozone. Let's see. Okay, so this is Ozone. Okay, this is also very interesting with ton of the volume showing here. So there's ton of the volume, and definitely this is a kind of a selling climax. So there's a tail here, the demand tail with the increasing of the volume. So the demand actually come in, but at the same time, there's still a lot of the supply which actually reflected in the subsequent bar here. So the rally is very weak. So despite there is a lot of the demand, but we still see that the supply is still there to cap the upside. Okay, so right now I think to just manage a risk and lock in a profit, I think, oh, sorry, I think this is the wrong one. I think we should have another Ozone. Sorry, I think Nasdaq, yeah, this is the one. Okay, very similar structure. Okay, so this is, yeah, I cover it here based on the breakdown, and then yeah, you can see that got a capitulation volume, selling climax. Right now, I think my alert is somewhere around here, 19.35. That's also my stop. So if it just reverse here, that should take me out, because definitely there is a lot of the demand come in that's correspond to the overall market. Okay, so that's the four stocks for the trade management. Okay, next one, the trade review. Uh, there's one trade from Malaysia and one for day trading, S&P 500, the ES, the future of the S&P. So I first just cover GREATEC, January 26. GREATEC effort versus results suggest the presence of demand. Last two swing low. I think this last two swing low act as a test with increasing of the supply, yet forming a high low. There's a supply absorption, and definitely there are a lot of the demands. They're all highlighted in orange color. So the trade is actually based on the presence of the demand, and also I think there's a localized breakout here. So let's just go to take a look at the chart here. Okay, so this is GREATEC, and the trading time frame is hourly time frame. In this hourly time frame, I just entered a trade here that's based on a breakout trade, a breakout of the downtrend line. So there's a immediate breakout. So I expect to just ride the rally. If you can just overcome 525, then I think we should just do something like this. But however, I see that there's some supply come in, and eventually it just drift down, and I eventually just exits right here. So when I see that there is a increasing of the volume, increasing of the supply, so there is just presence of supply, and to manage my risk, I would just rather to exit at a small loss. So I think I just have a small loss here. So buy at about 503 or 504, but exit at about 5, so right here, so at this bar. So because of the increasing of the volume, and suggested that there is increasing of the supply, but it did not really go down as my plan. You can see that next day is kind of up a bit, so with low volume. So overall, right now, I think this trade might be still valid. I still see some bullish commitment to the upside, because there is no follow through of the supply. So I think this is the bullish side for GREATEC. But to manage my risk, I just exit the trade. All right, so that's GREATEC. Okay, next one. This is the day trading on last Thursday, January 27th on Thursday. So that is the preparation before the market open, before the US market open. So the trade setup is quite simple, because we have a downtrend. So this is a downtrend, got a selling climax, automatic rally, and that actually form the structure. So we got a support, we got a resistance, and I think the best part is we got a FOMC bar. So this is the FOMC bar. When power speaks, then market reacts. So that's actually the selling zone. So my plan was actually to wait for the price to probably test and reject somewhere around here, right at the selling zone, and then I can just prepare for a short entry. So if you take a look at the structure, this is a 3 minutes structure. Okay, so the previous selling zone based on the FOMC is just right here, and I just highlighted or draw in the green line somewhere around 44.10. So pretty much that is the zone that I'm leaning on. So I'm waiting for some kind of the rejection. Okay, and here comes the execution. Okay, so when the market opens, it's still very bullish, and we see that there is a higher volume as usual, so that's pretty much about 20k. So we got an increasing of the volume that's probably maybe related to the increasing of the volatility recently, but still we just see that the price actually fails to commit above. So it actually fails to commit above the resistance level, and here comes there's a reaction or change of character bar with the increasing of the supply. So look at this bar here. So that is the increasing of the supply. So that should be this change of character bar, the bearish bar. And at this point, I'm actually waiting for some form of the test and confirmation so that I can initiate my entry. Okay, so the momentum is still generally good. So we see that the test actually becomes an uptrust. So there is a break above, but failure. So this actually an uptrust, and then followed by a reversal back. So first we got a climatic run, but fail to come in above, have a change of character bar with an increasing of the supply, and subsequently we got a localized uptrust. So that's also a failure, and when it's actually break back in, so that is actually the short entry. And when it just dip below, this is pretty much the non-RTH high, another level that I'm watching. So I just exited based on the effort versus results. So there's a increasing of the efforts. Take a look at this volume. So correspond to this bar, increasing of the efforts, and also previous bar when compared to the previous bar. So definitely it's the effort versus results. So we have an increasing of the volume right at this bar, but the results to the downside is very limited. So it suggests that there is presence of demand come in, and that's why I just close it right there, and that actually coincides very well with the level. So it's a good trade, profitable trade with I think slightly more than 2 RR of 2. So reward to risk is slightly more than 2. So that is a very short-term trade. Day trading, just hold it for maybe 20-30 minutes. So I think this is quite a nice and straightforward trade. All right. So we got quite a number of the stocks to cover. So let's start from the trading ideas. Let's jump to the chart and look at the US stocks. So the first one is a bullish setup. So look at this MDRX. So All Scripts Healthcare Solutions. I think this is tech sector, technology service, IT. Okay, so not really the sector I am keen on at this point, because at this point I generally would like to just stick to energy if I really want to trade long, but most likely I would just prefer to short. But because of the market condition, I think we just need to wait for a moment for next week to get a confirmation. But right now, what I like about this is that there is a very nice accumulation structure. So this is the big accumulation structure. We can see that it just initiated a breakout bar here. So there's a gap up there and followed by a very shallow pullback. So there's a very shallow pullback. Right now it's just approaching the resistance again. I think it makes sense to just wait. I would like to see some kind of the pullback, and if you can just do something like this, and I think that should become a valid breakout trade. So what I like to see is a reaction. So I would like to see whether there is a good reaction. So if it just jump up, gap up, then I will miss a trade. I won't jump in. Okay, so that's the breakout trade. I still need to wait for a reaction and need to judge the quality of the reaction for the trade. So this is a potential breakout trade. Next one is also a bullish stocks, is William Companies. I think William is related to the energy, oil and gas pipeline. So this is pipelines, and I really like about the structure. So definitely there is a relative strength. So as we can see it here, so that's actually comparing to the S&P 500. So definitely I think if you just look at all the oil stocks, energy stocks, then they generally show the outperformance. And when there is a sign of strength rally, hit the support level, have a reaction, is still holding up quite well. And I think this is the strength by itself. And right now, I'm just putting my alert is somewhere around 29.85. So that's generally a straightforward breakout trade. If it can break out, then possible that I can just enter a prompt position for more upside. Yeah, that's the potential breakout trade. So next one is Targa Resources, TRGP. If I remember correctly, that should be oil related. Yes, oil refining marketing. So this is another oil related company. Good structure. So some might just maybe think this is some form of a cup and handle. Yes, that's definitely a cup and handle. But I think that is probably a valid breakout trade. I'm still putting my alerts at about 58.05. So if you can come in above, then I think likely it can just go up and break out. Okay. So Nikki says, should we be concerned to enter oil stocks if crude oil price reverse? Yes, absolutely. If crude oil price reverse, definitely this breakout will fail. So right now, I'm actually anticipating some kind of the pullback for crude oil. So it just need to be very careful for crude oil. So in case crude oil just drop, then definitely I think we'll see that this oil stock will have a reaction as well. So generally their trend is very similar to crude oil. Okay. So next one, eHealth. This is a bearish stocks. So this is for the short trades, bearish stocks. At one glance, you know that this is a 52 weeks low stocks and definitely is very weak. Even the market rebound. Look at this. The rebound is very weak. So we see a big gap down and then followed by a very weak rally. And it's still not yet breakdown. And I'm putting my alert at about 20.7. That's based on a very straightforward breakdown or breakout trade, but it's to the downside. So if you can commit below, I will just put my stop somewhere around here. So just basing on these three candles, okay, and hopefully you can just ride it to the downside. But right now, I think the market should rebound. So let's see how it will perform, whether it will break down or maybe it will have another bounce up. So maybe it will do something like this. And then when the market turns, it will just go down. So let's see how it goes for eHealth. And so next one is renewable energy, REGI. REGI is also, I think, is a 52 weeks low stocks for the bearish trade, short trade. It's very straightforward. So that is a breakdown trade. But right now, I'm still looking for commitment to the downside, 37.73. So if the market rebounds strongly, then definitely don't expect the stocks will break down. Likely they will just follow the market to rebound. But the strength of the bounce up will be different. So we'll need to judge the quality of the rally. So whether it's just overcome this level or whether it can just come to the next level. So that's important. So sometimes if we see that the market actually rebound, some of the stocks might not actually follow. So that's the beauty or the advantage of shorting the stocks. So even for the previous stocks like Ozone or 2U that I have shorted, so as long as they did not violate my level, I can still keep holding the stocks and maybe it will just keep going down. So we'll just need to see whether there is a strong rally coming for these individual stocks. Okay. So that's a breakdown trade for REGI. Next one is VRV, VERV Therapeutic. That is also, okay, so this is during a new stock. So this IPO here, and we got some rejection, going down, going down, going down. So a very straightforward trend. And now just focus on this. So this is kind of like the inverse of the cup and handle. And very much that we see that the rebound is very weak. So we see a very weak rebound. commitment to the downside, and right now is coming up. So it's quite important to see that whether it will respect this access line. So if this is a resistance, likely that we see there will be a rejection. But if the overall market is good and is keep rebounding, then likely it will just commit above. Then there will be no trade. So what I like to see is some form of the rejection from this level. Okay, so that is VERV therapeutic. Next one is a UiPath. I think is also another Cathy Wood stocks. UiPath is kind of a bit late. Definitely not in a very nice structure because it's already breakdown. So we see that there is a break below, so breakdown, and we see there is another break below here, breakdown, and right now it's just within this down channel. So this is just a trade betting on the down channel. So I think okay for UI I have actually shorted it here, so that's based on the rejection of the trend line. So we see that there is quite a number of the rejection here. So now it's another rejection and correspond to this. So this is the access line and also is a breakdown. So we got a breakdown, test, and rejection. So I shorted here so I can put my stop. It's just slightly above. So it's just relying on the horizontal line plus this channel. So the stop location is fitting nicely. So I will see if it will just violate my short position. If it just have a strong rally all the way back up, then I'm out. So it will trigger my stop. Otherwise, I will just be holding. Okay, so that's a UI path based on shorting within the typical down channel, downtrend. Okay, next one. Okay, I think that's it for the US stock MDRX. So that's back to the first one. So next one will show you Bursa. Okay, so Bursa, the this tree in blue is that I cover the one that I covered last Sunday, and I think these are some of the new stocks, but well, not really new. I also covered it before. So let's go to the Malaysia stock watch list. Okay, I think KH also have some questions or your analysis of the ECOWLD. So, but yeah, I'll come back to that at the end of the session during Q&A. So let's just start from here. I like these stocks, the ECOWLD, because mainly right after this selling, I see that there is definitely exhaustion of the selling. What I don't really like about this is there's not much accumulation. So definitely this is not a typical style of the accumulation structure, but still is tradable. And I think the reward to risk is decent. So we got some unusual move. So attempt to break out, but it actually failed. But the volume is not that threatening, and we also see that it actually forms a higher low, and subsequently into the apex formation. And the breakout is nice and comes with a spike of the volume, and right there, it just have some pullback. So there's a pullback. I think this bar here actually shows some demand come in. So there's some buying with slight increasing of the volume, which is nice. So I think safely we can say that it's sort of tested the access line, and right now it just break above. So this is a reversal trade. So it should really just go up and test this level. So if it break above, which you see that there is a alert at about 97, then I think it should go up and test the gap, test the high, and let's see how far it will go. So the plan is definitely I think is already valid and already have a reversal. You can just put your stop just below maybe 87. So that is ECOWLD. And next one, ANCOM. ANCOM is one of the outperforming stocks in the Bursa, and definitely you can tell is kind of like the all-time high stocks. and we definitely see a very nice uptrend followed by another breakout backing up. And despite the US market correction, there is not much influence to ANCOM. So take a look at this. So right after this bar, so this is from last week, and we definitely see that last week is just kind of consolidating. So there's an attempt to break out, or you can say it's already initiated a breakout, but with a slightly downtrend line. So this is a downtrend line breakout here, and it's currently testing with a decreasing of the supply. So kind of still forming maybe a apex formation. So if we can just break above, I put another alert here, 339. So I think that should just go into all-time high and just trend up. So that should present a nice reward to risk, where your risk will be somewhere around here. So that will be the very tight stop. Or if you want, the stop could be just below this hammer. So there will be slightly wider stop. Okay. So ANCOM is bullish stocks. So next one is JADEM. JADEM, not a stock that I am keen on because it's very speculative. But depending on the structure, it might be still going up. I covered it last Sunday, but still it only break out on the Thursday. So this is the breakout bar, and likely it will just continue to go up. So what I don't really like is, I mean, it looks very manipulative volume. So this is kind of like a manipulative volume to me. And suddenly it just break down and then eventually just go back up. So it's like a corner counter to me. But still, if you are keen, then that's probably also a valid type of the setup. So a breakout trade with your stop just below the access line. All right, that's JADEM, and PMBTECH is another big name. There is a very speculative run up, and after that, we definitely see there's a correction, but no follow through to the downside. In fact, the selling just dies down. There is exhaustion of the selling and forming a range. So this is the range breakout, and right now is probably at a sign of strength rally. So if we just look at this, sign of strength rally, and looks like a supply absorption to me. And if we zoom in, definitely you can tell that supply has been decreasing. And if you can just break above here, I think it should just continue to go up. So that's a PMBTECH. So next one, MSC. I think I covered MSC before. Right now, I think that's kind of still probably near all-time high stocks. Let me zoom out a bit. Yeah, it's kind of near all-time high. So it's very much a textbook style structure. We've got a sign of strength rally and backing up here. So if you can just break above and come in above, then I think it should have more upside ahead. However, if it just come down, tested the swing low here, I think that could present a long opportunity. So looking for maybe a bounce up at about 3.1, so somewhere around here. Yeah. Otherwise, if you are aggressive, then you can watch out for a breakout trade with your stop maybe somewhere around here. Okay. So last one I think is INNO Plantation. INNO is kind of a not so liquid stocks, but I think it's still tradable. So last Friday is just breakout. There's an increasing of the volume, and we see that there's a rejection tail. I would like to see whether you can just have a test. So have a test of the access line, and if it can reverse from here, likely that I think it can just go back up some more. All right. Okay, we still have one more, PMETAL. So PMETAL I think is still very bullish, and there is a good structure. There's a correction here, but after that it's just forming the sign of strength rally, very shallow type of the backup, and then continuation to the upside. I think got some rejection when it's testing the resistance. So there is a resistance. Right now, I think especially the last few bars here. So right after this reaction, we got this kind of a reversal followed by a test and then no supply. So these are the quite a nice combo combination. If it can breaks above 611, likely they will just move out and test the swing high, and hopefully it will just break out. So I really like the last few bars action. So some supply absorption process. So that's a PMETAL. All right, so I think we are done with the stock trading opportunity. Okay, so now we come to the Q&A. We got quite a number of the stocks to go through. So Dave say can look at KWEB, have been watching to see accumulation structure has started or bottom out for China laggard market. When is the best time to enter a laggard like KWEB? Don't want cash to get stuck there for long accumulation. Sure, let's jump to that. First, let's start from this. Okay, so before I just jump to the Q&A, here's an announcement. If you enjoy the weekly, feel free to go to my website www.tradeprecise.com, and inside I only got two flagship program. One is the weekly live session and the other is the mastering price action trading. So yeah, that's it. There's a very short announcement, and I'll be adjusting the price after the Chinese New Year. So if you like it, then you can feel free to sign up. All right, let's jump to the analysis. Okay, the first one is Baba. That's from Nikki. China team, short entries for short entries. Okay. Could you comment on my Baba analysis? Just more down, move ahead for long bargain hunting. Uh, Downtrend in a small trading range. Yes. High volume. Okay. Broke down, more supply greater than demand. Barbie, more capitulation. Yes. Basi stopping volume. Yes. Effort versus results. Rarely A unable to close above. Okay, so yeah, so I think you pretty much already analyze it. It just struggled to go up. When it's going up, it just tested the access line and then show rejection again. And I think it's definitely not a bottoming type of the stocks I'm looking at. So let's quickly look at Baba. Okay, so this is Baba, and okay, I got the Dow channel. I think the Dow channel is still in play. Um, if I look at the very long-term structure, is currently testing the support. So there is a support here. So there's a support because there's access line. Once it's breaking out, now it becomes a support. So this is a support zone. Right now is at the support zone. So I think it's very crucial that for bullish case, if we want to see Baba to bottom from here, we need to see that it need to initiate some kind of the big rally from here. And I need to see that it need to break out of this downtrend line. So I want to see the best rally. So it must be better than this. And so this is a very weak rally. But judging on the last reaction here, there's increasing of the volatility, not looking good. I suspect there could be some more weakness ahead. So not really looking good. I think that it could break down. So let's see if we can just bounce back up and then break down. All right. So I think there are more downside ahead. So not really for bargain hunting. I mean, if you want bargain hunting, certainly there will be a lot of the chance and you will have plenty of time. Rarely you will have a V-shaped type of the rebound unless there is something going on with the market. So I just suspect that there will be more weakness ahead for Baba. Okay, so this from Cash. Hexstar still in a good uptrend. Uh, okay, yeah, no sign of threatening. Yes, I agree. Plan to re-enter when price drop to 15160. I think you rely on this structure, right? Yeah, I think should be. That is a valid plan. Yeah, go ahead. If you like this kind of the uptrending stocks, relying on the uptrend, certainly I think this is a good level, 158 to 160. So let's take a quick look. Hexstar. Yeah, I think this is the level. That should be it. 158, 160. Yeah. So if it can reverse from here, that should be a bullish sign that it can just go up and even break new high. EcoWorld. So I explained EcoWorld. I think is very much uh, similar to yours. I guess price breakout immediately downtrend line, resistance with minor increased volume, anticipate. Yeah, cut loss 885. Yeah, 885, 87 or somewhere below. It doesn't matter. So yeah, I'm bullish on EcoWorld, and probably I wouldn't really do the phase analysis, phase D, because like I say that I don't really see much accumulation volume, but you can trade accordingly with the volume. That's fine. Press metal, I think phase D making a nice uptrend, higher low, yes. Sign of buying absorption, three high volume bar. Yes, yes. That certainly is a very good observation, Catch. There's an absorption going on. Enter at 604 when price rebound of 598 and it's a breakout immediate resistance. Yeah, I think that's good. As long as you have your stop in place, that should be a good trade. Okay, Kobe. After selling climax, increased volume price action have entered into a trading range. Yes, certainly is a range. Sign of declining volume. Yes. Short-term trading strategy: buy low, sell high. Okay. Risk is low. Um, yeah, I do have comment for Kobe. I think Kobe is probably not a good location to trade. Well, I mean that really depends on your trading style. Decreasing of the volume also means that there is a lacking of the demand as well. So I would prefer to trade stocks like GREATEC that actually shows there is actually presence of demand. I think that will be better. Otherwise, this is generally a range trading, buy low, sell high. There's no issue, no problem, as long as you have your stop. And given that if the overall market is bullish, then I think it should do the job. So yeah, so it's up to you. All right, great. Let's go to KWEB from Dave. KWEB. Okay, this is a crane share. China Internet ETF. Okay, that's a China ETF. Wow. Okay, it's a quite a straightforward downtrend, and definitely there is a lot of the selling on the way down. So we got a climatic run up, like a parabolic run up, distribution, and then inability to rally, break down, redistribute, and then mark down, and we got redistribution. Okay, and we got some heavy volume. So there's a ton of the heavy volume here, and we still struggle to see upside. I mean, the only bullish thing is there is a shortening of the trust. Okay, so If you look at the trust to the downside, so this is a trust. Okay, this is the trust. Definitely, I see there's a shortening of the trust to the downside. So suggesting that there's an exhaustion of selling. So definitely, I think is probably exhausted. I think it's probably dropping a lot. Is from 90 now down to close to 30. So yeah, it's quite a lot. Definitely not the time to buy. Yeah, I wouldn't buy it here. Definitely, there is no signs of buying at this point, because even now there is still no signs of a stopping volume apart from probably a shortening of the trust to the downside. When to buy or what sign? Well, you can definitely check back to the accumulation structure module, and roughly we need to see a base form. I want to see something like this, a change of character. So that is the first sign I want to see. So I want to see the best rally. Hopefully it can just to about 50 or 52. So the best rally is something that I would like to see first. Okay, if it just do not have this kind of the rally, then I wouldn't touch it. So it's still a downtrend, down market. Okay, say, could you comment on DNO and GREATEC? Yeah, sure. Yeah, I think I forget. Sorry, GREATEC and DNO. GREATEC is still within a down channel. I don't really see trading opportunities. Generally, it's still a downtrend. Um, yeah, so not much to comment. DNO is probably similar to GREATEC. So we have a oversold condition, so very similar to a lot of the tech stock in Malaysia. This is a selling climax, so we got an oversold condition, and right after that there is some buying coming. So we got some increasing of the volume here, so there is some demand coming in here, but after that we see that there is a decreasing of the volume. So right now it's just like a backup action. So we got a side of weakness and we got a backup action. So overall definitely is not for buying. I wouldn't really buy it here. But if you really want to trade, it's tradable, but you need to use a smaller time frame, something like buy low sell high, or some trading plan similar to GREATEC. Yeah, like I say that there is a stopping volume here, and then we got buying on the way down, and eventually we see that selling decreasing and exhaustion, and eventually it will just kind of go back up. But instead of DNO, probably I think GREATEC will be a better buy, because there is a very obvious presence of the demand in GREATEC rather than DNO. But having said that, exhaustion of the volume, as long as there is no increase of selling, I think we should see you can still go back up to test the gap. So you should test this resistance level, so resistance zone somewhere around 4.88 to about 5.10, 5.1. So that will be the immediate resistance. Okay, so Muhammad Saiful, please comment Dan X. Dan X. Okay, sure. Let's look at Dan X. What is Dan X? You mean DNX or Dan X? Is it DNX? I couldn't find a ticker symbol Dan X, so I presume it's DNX. Uh, DNX is certainly is bullish, but I think the good buying opportunity is this access line here. So somewhere around 87 or 88. So you can see that there is a test here. So there's a strong demand, increasing of the volume, strong demand come in these two rally. But there is some profit taking. Not too bad. is just testing this access line and at about 80, 87, 88, and it's reversal. If you can come back to have a test, that should be some good buying opportunity. Okay, RGTech from what? All right, so this is RGTech, and okay, I think we probably have a little bit of the structure. So let me just draw a few lines. So we got a access line here. So first, you can see that there is a good rally, breaking out, tested, and rebound again. Now is tested right at this level. So that is the kind of the stocks you probably should be looking if you rely on this trading range. Okay, so if you can just bounce up from here, because one thing to take note is that this is quite a it's a quite a like a speculation or the penny type of the stocks, and there's a lot of the volume, but still you need excessive volume in order to move this kind of the stocks. And if it can break above about 43 or even 43.5, like generally is this bar, then I think likely it can just go back up. So one way is to wait for a breakout, then you just go in. The other, like here, this is a very low volatility environment, and there is a decreasing of the volatility. If you're really comfortable with this, then you buy it here, then your stop will be just below here, very tight. So that would offer very good reward to risk. So either way is fine. So wait for a breakout. Otherwise, you buy here and it might get stuck here for some time. Who knows? But maybe it can move on Monday next week, next month. So there's pros and cons. Okay, Chris, could you have a quick look? Gold, yeah, sure. Gold and minor. Let's start from gold first. Okay, gold is a bit disappointed. So I think I covered gold. Think about the bullish structure. There is a apex formation. So look at this. So there's a apex here, apex. But last week I mentioned that in order for the bullish scenario to maintain, we definitely need to see some commitment above. So the failure come, I think at this point, so there is a failure bar right here, but it's not too threatening. I wouldn't say that it's become super bearish. A failure from this point onwards, it simply means that it just still struggle to commit above. So look at where it fails. So there is a bearish bar here. So this is a supply zone. So spite of the volume supply zone, it just failed to overcome the supply zone, suggesting that it needs to spend more time within the trading range. So this is still a trading range environment. So the green box here. So I think you will need to wait for some time for it to settle. Supply is still generally quite high, so it might just still keep going down and test the support. And gold miner, let's see, GTX. Okay, so gold miner is similarly having this breakdown. Sorry, the failure. So there is kind of a uptrust here, but 1, 2, 3, 4, 5. So it's already leading the way down. So there is some sign where the gold miner actually just have some weakness, followed by a down move. Uh, in short, I think gold miner is still need to spend more time here because we definitely see that there is some form of the structure going on here. So maybe this is a one. So something like this. So still a trading range. I guess we still need to wait some more time. but now it's at a support. A range bounding play could be nice if you are keen on this kind of the buy low sell high. So it get tested a few times. So next bounce up could be around 33, but generally it's a sideways market. Not much exciting. GDX, GDXJ. What is GDXJ? GDXJ. Okay, the junior miner. Yeah. So it's a very similar structure with GDX, but we definitely have a downtrend. So attempt to break out, but fail here. So right now is definitely is weaker. I think what we can rely on is a support level here. So right now is 37 or 36. So somewhere around there is quite a support that you need to hold. So in terms of the volume, there is increasing of the volatility coming down. So I think this is not really a good sign. Uh, More bearish than gold itself, the gold miner. So the next level of the support could be this axis level at about 30 34, somewhere around here. If it just fell at this level, 37. Okay, gold got whacked hard this week. Yeah, that's right. So gold is just whacked hard this week, but I think gold miner actually leads the way down. Gold is still generally in a good trading structure. Welcome, Chris. HYT, can you comment on VIS and Inari? Sure. Let's see. VIS. Okay, so this is a VIS. I think VIS, the structure is certainly not good. Big trading range, super big trading range here. But selling is quite limited. I don't really see a lot of the selling here. It's just fall together with the market. Right now it's at a support. Yeah, who knows? Maybe it can just reverse from here. I mean, if you zoom in, so there is a very limited of the volume. I think this is quite a illiquid. Okay, not so much illiquid, but decent. So if we can just break above here, so we rely on this little structure, maybe in hourly time frame will be more obvious here. So if we can just break above, break out here, so there could be more upside ahead. So there is an attempt to stop here, and we got some exhaustion of the selling, and now it's just up to the bull to prove itself. So if you can just break out and go up, then likely you can just go back up and test this level, maybe 95. That's only provided if the overall market sentiment is good. Inari is, if I recall, I think it drops quite a lot. Okay, so this is Inari. Okay, certainly Inari already violated the structure. So we got a nice structure here. So I talk about Inari here and here as well. So quite a lot of times. Um, that is accumulation structure until this point. Okay, so this is a failure. So when you see this failure, that is your first alert here. And subsequently, it's just have another big breakdown, and eventually we see that there is an uptrust. So this is an uptrust. So look at where it actually stopped here. So it first need to overcome this selling zone here. So if it fails, so it will just go down, and this level just fail to provide support. And we see that there is an increasing of the spread, gap down, gap down action, some increasing of the volume, some attempt to stop as well, but so far there is no rally. um, yeah, I think definitely is not the time to buy, and usually for this kind of the structure it will likely test a low, so it will just go back to test a low. Then I think that should be a good time to go in to buy, if you really would like to have a swing up. So at the moment is bearish, but short term, if the market rebound, I believe that it should rebound. So maybe it can just rebound for a bit before it resume to go to test the low here. So that's Inari. Okay, EPMB. So one of the better EPMB. Sorry, EPMB. EPMB. Okay, EPMB from Cho Shijie. All right, so EPMB is not bad. I like this kind of the structure. So still, I think in terms of the overall bullish structure is still not yet violated, because we still can see that is within this big trading range. So that's right after we have a sign of strength rally. So that is considered as a backup action. Supply has been decreasing, and during the sell off, even it drops, but there is no expansion of the volume, suggested that there is just lack of selling. So I mean, one thing to bear in mind that is this is also kind of a illiquid stocks. Well, not so much illiquid, but not very liquid. So especially if you look at this, so this is where there's a lot of the participation, and when there's when they're gone, then it's just like below 1 million, even below 500k. So this is a very thin volume, but as long as there's still active volume, even the supply or volume is decreasing, likely is still not too bad. It still can hold up. So uh, for long entry, probably is late already. Very short term, I think that would be somewhere around here. But if you really want to have a decent swing, maybe you can wait for uh, a very obvious support level at about 94 or 92, 95, somewhere around here. Or it can just come back down to have a test of the low. Then if it reverse back up, then that should provide some opportunities to long. But overall, it's a sideways market. So buy low, sell high is probably the best that we can do for this kind of the market. All right, that's EPMB. Okay, so any more stocks? If there is no more stocks, then we can just call it a day and end the session. Okay, I assume that there's no more questions, and hopefully you all enjoy the session. And yeah, okay, I think no more question. So I think I will just end the session here. Thanks everyone for joining, and let's just see how the market will do and whether there will be a strong rebound coming in. And in terms of the picking the bottom, likely that I think we should really see maybe one more leg down before the US market really bottom. But in terms of the individual stock picking, it's definitely there will be plenty of time for the stocks to form a base, such as accumulation structure. So don't really need to worry to miss the opportunity to jump in. And when the bull market resume, I think this is a very good time to long the growth stocks in the US market or even in Malaysia market. But in Malaysia, probably not much discount because the market did not really fall a lot, especially in the tech sector like in Inari, Franken, Penta, and a lot of the well-known stocks. There are not a lot downside. So I think for the US market is different because a lot of the growth stock have tanked a ton. So I think if the next bull market resume, which could be soon, then I think that should present a very good opportunity to long those stocks. All right, thank you everyone. Thanks for joining. I will see you next Sunday for assisting students. Thank you. Bye bye.